You were right about the trade, but wrong about the position size. Your account is gone. This is how beginner traders get wiped out. A 70% win rate sounds great, but look at this chart. Even at a 30% win rate, you're $10 up. At 50%, which is normally a coin toss, you're 150, and at that 70%, you're up 290. How is this possible? Because your risk reward is in the right place. You're only risking 2% of your portfolio in any trade, and your risk reward ratio is 2.5 to 1. Previously, you were focused on the win, and that's the killer. You want $500 profit on a day, but your first trade in open at 20x leverage, you get stopped out with a loss of 32%. So now, just to break even, your next trade has to be a 47% profit. The maths aren't equal. You lose 32%, but to get break even, you need 47%. Think about that. That's $818 you now need on the day. It's just impossible. You were focused on the money. Trading is not a sprint, it's a marathon. So how do you survive these losing trades? 3 rules to keep you alive. Rule 1. Never put more than 10% of your portfolio into a single trade. This is how I do it. If it's a risky market, I will do $100 on a $1,000 portfolio, so that 10%. However, I can be a little bit more risky in a full bullish market, and I will go to 5 trades with my $1,000, so $200 per trade maximum. Rule 2. Never risk more than 2% in any given trade. Let's look at an example. Assuming you have a $10,000 account and you're going to risk 2%, and your stop loss needs to be 5% on this trade. That means that your maximum position size is $4,000. If you look at a second example where your account size is $5,000, again a maximum risk of 2%, and this time it's a volatile coin, so you need a 10% stop loss. That means you can only put $1,000 into that trade. This way, you're not just going all in, you're calculating your risk ahead of schedule. So if you take a loss, you're taking a smaller one. But here's where most traders guess, whereas in reality, you need data to make solid decisions. Let's look at this pulse flow alert, where it had an 80% win rate in the trading card for SNX. I may decide, okay, with that kind of history, I will do a 2% risk. Whereas you look at Cheems here, and it only has a 63.6% win rate in the last 30 days. I might decide to only risk 1%. Data is essential as you take your trades. Within pulse flow, this isn't theory. Look at this weekly alert. The order block strategy, 81.3% win rate. Institutional liquidity or liquidity sweep, 78. Consolidation, 78. VWAP bounce, 76. This is real data that I have gathered as we have done thousands of signals over the last N months since Pulse Flow was launched. And this gives you confidence as to when to trade. Rule 3. Stop thinking in terms of dollars and start thinking in terms of the process and the system. Let's look at this, the dollar mindset. How much did I make today? As opposed to, did I follow my rules? Did this trade win? Was this a grade A setup? Can I make $500 this week? Did I respect my 2% risk? I need to recover my losses. Did I stay within my 10% allocation? How fast can I double my account? Did I journal this trade? The left one results in emotional trading, revenge trading, and blown up accounts. Whereas the mindset on the right says disciplined trading, and the edge will reveal itself over many, many trades, but you're constantly building. It's a marathon, not a sprint. Finally, keep a trading journal, either on paper or in a spreadsheet, because this is something you can look back upon and analyze your trades where they went correct and where they went wrong. You can write notes to yourself. For instance, on this one, stopped out, entered too early, was impatient. You start to understand your own trading style and how you need to adapt your risk management based on that also. Let's take a quick look, just for fun, at two different traders. Trader A doesn't care. He just goes all in, he does all kinds of crazy things, and over a number of trades ends up from $10,000 down to $3,750, and he's demoralized. Whereas Trader B is disciplined and uses the system, 2% maximum trade, and over time, smaller wins, but he's now up to $11,000. Stop gambling on today's profits. Build a system and stick to it. Learn from it. Adapt as the market changes. This is how you win long term.